This is Such a Prettyman of Cirrus Research. The latest briefing issue is just out. The title, January Effect, Accentuates Broadening. At the heart of this, we saw a massive recovery in the smaller cap market against larger cap stocks. This looks to be the classic sort of seasonal anomaly that has been published quite a bit in academic journals. The bottom line is that as the market continues to broaden, we're witnessing it overseas, we're witnessing here, we're witnessing in precious metals. The performance data here is fairly stark. You've got the S&P 500 up about 1% and change. The Russell was up over 5%. And you also have emerging markets up over 6-7%. Bottom line, what is going on here is something that started since really March, April of last year. What we've got is that central bankers are looking to lower dollar reserves. As they do that, you get a weaker dollar. You also get assets to begin to flock to everything else. So what this means is in this uncertain period, valuations matter more. Overseas markets relative to large mega cap stocks, historically discounted. US small microcap stocks, historically discounted, and so on. So the bottom line is that the geopolitical uncertainty echoed by the rush to precious metals is also echoing through the capital markets. We think this will likely continue as the fracturing of partnerships continues to dominate. Importantly, the broadening that's referenced is also occurring in the AI trade. This has become almost a single pillar of performance in the last year or two. What we're noticing that's different both in 25 and year to date is the fact that as much as the chips are performing well, notice that data centers, nuclear have performed quite well. The application side has lagged as right now the software firms continue to be under pressure as investors question really the impact of AI spending, AI investments upon the software profitability. One thing that's very important as we witness the software firms, application software firms, really break down both in large and smaller cap stocks. What is a bit disconcerting is the fact that the forward estimates remain fairly buoyant. This is important to understand whether or not we see a bottom sooner or later. In other words, there's a lot of mistrust, uncertainty about what the profit margins will be for the SaaS firms. That said, while the estimates remain high, it's very difficult to see upside surprises in the coming quarter. So at the heart of this, we expect to see these estimates fade further. As that occurs, you will likely get to more of a bottom in the software firms. Importantly, the other key theme here is power generation, infrastructure, data centers. All of these tie back to industrials. We are in a global run for industrials currently. This is playing out in spades in the small microcap sector. We think the smaller cap names have really been exaggerated, potentially really cause for caution there, but the spending process, the backdrop for industrial spending should remain strong. With any questions, feel free to reach out to us. Thank you.